Hello and welcome. You have tuned into Closing Trades right here on ET Now. I'm Srishti Sharma and with me Snehi Shah. And Snehi, this particular week has been so exciting for the markets. I mean, we started the day with that positive GST news flow, and for the last 4 days, Nifty has been just building onto the gains. But today seems to be a day of a pullback, where Nifty as well as Nifty Bank, they both are at the day's lowest point right now. Over 180 points of cut coming in on Nifty 50, while Nifty Bank 2 also declining. Almost 600 points of decline is what we are seeing right now. So the selling pressure is getting intensified, but let's also note that from which of the stocks and pockets this pressure is we are seeing coming from. So what we see right now is that select counters within the cement pack, Adani group of counters, they are seen to be declining. Select counters within the auto pack, they are seen to be retracing back too. And from the IT pack, it's TCS that is seen to be putting a bit of a pressure. ITC, like we have been flagging off, with over 40% of SINS tax that could be applicable, and how brokerages have actually gone ahead and cut their target price. And ITC too is been one of the laggards in today's trading session. And so is the breadth of the market. That also not that cheerful right now, because on NSE as well as BSE, the number of stocks that are declining are overpowering the number of stocks that are seen to be advancing. But Sneha, I guess given the run-up that we have seen and the resilience that Indian markets have shown, we shouldn't complain much.
Well, Srishti, complaining a little today is fair, because the kind of rally that we've seen in the green for 4 days, one would naturally hope to see a fifth day in the green and hope that the week ends in the green. Although on an overall week-to-date basis, we'll see how we've closed. But today, on an intraday basis, it doesn't seem like that is going to be the case, because Nifty 50 is lower by 0.8%, so massive cut coming in. And we've even slipped below the 24,900 mark for now. At the day's low is where the Nifty is at. Last 1 hour of trade, let's see if we're able to recover, because there are select pockets in the market like Ircon International, Titagar on the back of auto wins coming in. You have Edelweiss Financial that's seen an investment by Westbridge Capital in Edelweiss Asset for 15% with a deal of 450 crores. So there are select stocks that continue to do okay, Edelweiss under pressure. But you do have the broader end of the market that's trying to hold on to some gains. It's not looking all that good on that front as well. But in terms of top gainers, ABFRL, that stock continues to do well. So is a Swan Energy, IPCA. So some of these pharma names are doing well, as are Auto Angsec, Uno Minda. So maybe mixed moves coming in across the market. But let's understand a little bit more about why we're ending the week in the red, not on a week-to-days basis, but just today's trading session. We have Narendra Solanki, Head Fundamental Research Investment Services at Anand Rathi Shares and Stockbrokers, joining us. Narendra, hi, good afternoon, and thanks so much for your time. And that's exactly the question, right? What has got the sentiment so marred on the street that after 4 positive days, we're seeing such a nosedive coming in on the Nifty? Is it only profit booking, or is there more at play over here?
Yeah, good afternoon. Yeah, see, after a decent 600 odd rally or recovery, I think today we are seeing largely profit booking ahead of the key Jackson Hole speech which the Fed is going to make, and we have a 2 days holiday and also a shortened next week, wherein on 27th the tariffs deadline is also coming to an end, which is a holiday again for our Indian market. So I think these two key events the markets are factoring in, and that might be just on a cautious note. Traders are booking some profit after around 650 points rally.
All right, so that's a bit of a profit booking that what we are seeing on the benchmark indices, at least for today. But Narendra, also talk to us about the sectors that you believe can be gearing up for the next leg of the rally. Because if we talk about this particular week, the auto counters have done very well for themselves, and so was the consumption basket overall. What is your own sense? Where are you putting your bets?
Yeah, definitely. With the reorganization of the GST slab rates and simplification of the GST structures, I think the auto sector has got back its momentum. And of course, the FMCG segment, both consumption as well as durables, discretionary and non-discretionary, have not performed really well throughout the year. And I think since in the second half, with the festive season coming on, inflation going down, rates are also at their lower levels, and the the rural market is expected to do well because of good monsoons. I think second half is going to be better for both these key sectors of our economy. So we are betting on auto inquiries, then consumption, both discretionary and non-discretionary, and as well as non-banking financial companies which are more consumer oriented, like Bajaj Finance, Chola, kind of segments we are looking positive for next quarter or so.
Okay, so that's the take on some of the sectors. And in fact, Narendra, let's just address the flashes on the bottom of the screen. 23 chip design projects have been approved under the design linked incentive scheme. The government is pushing for semiconductor design innovations with this said scheme. Narendra, you believe EMS could now be a good space to look at, given that in his Independence Day speech too, PM Modi had flagged off the need for domestic production of semiconductor chips. What's your take on this entire space?
Yeah, definitely. EMS has been one of our key themes where we are positive on for the long term. However, you have to keep in mind that these are very long gestation projects, and these kind of projects doesn't deliver in a year or two. So you have to have some kind of a patience to hold these stocks for 3 or 5 year timeline period. And within these timelines, you might be also witnessing different valuation cycles because of different maybe ordering activity or different momentums or different sentiments. So you have to keep holding those stocks, and then only you can achieve a good return on that. But yeah, from a theme perspective, we are currently positive on EMS theme, and we recommend whenever any hiccups or knee-jerk reactions come, then it's a good opportunity to add for the long term.
That's about Dixon Tech. But moving on, let's put the spotlight on the auto major Maruti Suzuki, and let's tell you what's exciting that we are picking up on Maruti Suzuki right now, because what we feel is that exciting times ahead for Maruti Suzuki in terms of their SUV offerings going ahead, and a couple of major events that are lined up for Maruti Suzuki. First up will be 26th of August, where we will be having an event by Maruti Suzuki where the company will roll out their first BEV, e-Vitara, from their Gujarat plant, and along with that, the company has plans to make the exports of this particular car to 100 countries. So that is one of the events that we will be watching out for. Of course, with the first ever launch from that particular plant, and that's going to be an electric vehicle, the gates are already open for the upcoming launches in the times ahead. But next up, in the month of September, 3rd of September is also going to be an interesting day, as the company has said that they're going to be launching a new mid-size SUV is what we are picking up right now. What they have said to us is that some of this exciting launch or something exciting is really there on 3rd of September, but we understand that it could be a new mid-size SUV. And for the first time ever, you may have a 4x4 option for Maruti Suzuki, and a tech upgradation to ADAS level 2 as well is what Maruti Suzuki can come up with. The new car can have 3 engine offerings, be it petrol, hybrid and CNG, and all of this to be kept in mind, as Maruti Suzuki has already made their plan clear that they want to be really, they really want to make it up for the SUV market share and the kind of loss that they have already seen in their overall market share. For now, the overall market share is close to 40%. We have been hearing out about their aspiration to take it higher to 50% as well. And in terms of their offerings in the mid-size SUVs, yes, on your screen you see that Maruti Suzuki is lagging behind a bit versus their competitors. So seems like exciting times for Maruti Suzuki in the times ahead. Major events lined up. We'll definitely watch out for that. But Narendra, what's your sense on Maruti Suzuki? Yes, of course, we have seen a very good run-up because of that GST news flow kicking in, and the entry size cars, they are expected to get the bigger boost. But with this new launches and the kind of things that the Maruti Suzuki plans to do for their rest of the portfolio, how do you see that stock?
Yeah, definitely, it's a positive for the company. However, the mid SUV segment is a very contested and very highly competitive segment to be in. But with the presence, with the distribution level of the Maruti and the after-sales service of the company, I think it could make some dent and gain market share in that segment. So it's positive for the company in medium to long term. And also to look out for is the exports. So exports should also drive some part of the revenue revenue growth. That is what we expect with the stock.
Okay, so that's the take on Maruti Suzuki. Let's shift focus, and Narendra, let's talk about the entire realty space. There's IT, both of these are lagging, but in fact the big laggard today has been metals and FMCG. Out of that also, I want to get your sense on FMCG and consumption now. So many levers for a consumption boost. Could be the Independence Day speech, the GST rate rationalization, the budget boost coming in, RBI boost. So many levers at play over here. Where do you think consumption could head from here? Because that cheer is something we saw for a couple of days on Nifty FMCG, but no meaningful recovery or turnaround here. What's your take on this?
Yeah, definitely post announcement, we have some kind of a relief rally. But what market might be factoring in is the near-term impact of delayed sales or delayed demand because of that announcement taking effect, would be taking effect in maybe in October or somewhere in mid-October. So that kind of would shift the demand at least 1.5 months ahead. So that impact might be market may be factoring. Hence, we have not seen any follow-up rally. But I think if you remove that aspect and see the longer term, 1 year down the line, 2 year down the line, so that's that then there is no doubt about the improvement in the overall consumption and demand scenario for both FMCG as well as durables segment. So I think the overall in second half the performance should be better than the first half overall for the sector.
All right, so that's the take coming in on the FMCG basket. But Narendra, the other pocket that is showing decent moves rather today is actually the pharma pack. Because we were also highlighting and flagging off the fact that 15% tariff on pharma that is being applicable on EU and US deal versus what was threatened to be with that 200 to 250% bracket with respect to pharma tariffs. But yes, the overhang still remains. But what is your own sense on pharma pack after so much of correction? Which are the pockets that you are liking?
See, in pharma, our broad view is that the drug manufacturer or drug exporters, there's not much downside from here on. We only see recovery, but that recovery is very difficult to time because of the tariffs situation is not very much clear as far as Indian pharmaceutical exporters are concerned. However, another pack which are hospitals. So we are very positive on the hospitals segment in the healthcare sector, and we see a lot of capex coming online in this year as well as in next year, and a lot of operating efficiencies improving for those hospitals wherein the new capex has done and the utilization rates improve. So in comparison with drug makers, we like hospitals much in the healthcare segments.
On healthcare, we also have Gaurav Bissa, SVP at Incred Equities, joining us. And Gaurav, hi, thanks for your time today. And want to get a sense on the technicals as to why we're not being able to hold on to that 25,000 mark. Because even when we cross it, we were able to hold on to it yesterday perhaps. But today, all of that has reversed. And not only that, we've taken a nosedive in today's trade. What are the patterns on the charts telling you? And where do you see any near-term visibility, if at all, for us to hold on to that 25,000 mark and scale up from there?
A very good afternoon to you and your viewers, and thank you for inviting me on the show. See, as far as the reasoning behind why we could not hold at the higher levels, one theory is quite simple. We opened on a gap up note now a couple of days back, and what we are seeing at the current juncture is if we're trying to fill that gap, we are right at the gap support area. And this is quite common. We have seen on multiple occasions that whenever there's a gap happens, generally the possibility of either the gap filling or Nifty coming towards those gap can be seen. So in my opinion, we are right at the support area. If Nifty sustains 24,850, 80 on the spot side where we are trading currently, then we are back in the game and we can go towards 25,200, 300. So I would say it's a healthy thing that is been happening on low time frame charts. We had a very strong upside from 24,300 to 25,200 yesterday. So this strong upside in a relatively short period of time resulted in momentum indicators entering into overbought zone on lower time frame charts, and what we are seeing is normalization of that thing happening. So let us see if we are either filling the gap. If we fill the gap, that also is a positive sign. Even if we do not, then I think Nifty is right at the support area. I would not recommend a buy at the current junction. Let us see if Nifty goes a little bit higher, then you take a punt. But at the current juncture, I think Nifty is at the support area.
All right, that's the take on the markets. Hi, Gaurav. Good to be speaking with you. It's been a while already. Hope all well, but let's start having your view on the auto space rather, because we were just chatting about Maruti Suzuki in particular, and we were just talking that how the company is gearing up for the next leg of product launches to be planned. What's your own sense? Because the stock is already given a very good move.
Hi, thank you for inviting me on the show. See, if you look at the Nifty overall, auto overall, then you will see that it has been in a consolidation, tight consolidation for a while now. It's been 1.5 years that Nifty auto has been consolidating. In that perspective, it had the similar chart, the mirror image of that was reflected in Maruti Suzuki as well, which was also in a 1.5 year consolidation. Now we have seen a breakout of the consolidation happening, and this consolidation can push it towards maybe 15,000, 15,500. Now the levels might seem smaller, it's just we're talking about 3-4% from here, but one needs to also understand the breakouts were at lower levels. The breakout levels were 13,200, so we are already 1,000 points, 1,200 points above that particular breakout area, and that particular breakout can push it towards 15,500. So overall, the setup remains positive. If there's a decline happening, this has also seen a gap. So if it indeed tries to fill the gap, that would again give a buying opportunity for somebody who has already bought at lower levels, can keep riding it. As a disclaimer, we had also recommended this stock way back, a year back, when it was trading around 9,800. So we have also started initiating some profit booking strategies in the stock. So in my opinion, while the trend is very strong, I would not recommend buying fresh, but any dip towards 13,500 can be bought into.
Okay, so that's the strategy on Maruti and also some other stocks. But Narendra, I want to come to you and get your sense about the entire AlcoBev space. We also interacted with the management of Radico Khaitan. We listened to a soundbite after we get your view on this entire space. What are you making of some of the stocks over here, and does this space now look attractive because that whole GST overhang is now away from this space?
Yeah, definitely. We are positive on this space, and we look for the demand situation to improve and the volume growth to resume, and especially in the festive season and the second half of the year, we expect the volumes to improve. And with the overhang of the GST gone, I think the segment can start delivering on the returns.
Okay, so that's the take on the AlcoBev space, and as promised, let's go across and listen into the management of Radico Khaitan, because speaking about the much talked about news of GST rationalization, we had the management, Dilip K. Bantia, the CFO, and also the COO with us on the show, who says that if AlcoBev comes under the GST ambit, it will help them with input costs. Let's go across and listen in.
Alcohol is not in the GST and it is a state domain, state subject. It required constitution amendment with 3/4 majority, which didn't take place at that time. And we see that alcohol continues to be in a state domain. As far as GST rationalization is concerned, the government is contemplating slab rationalization and two large slabs like 5% and 18%. At this point of time, we pay 18% GST on most of our items, and we absorb around more than 200 crores in our cost. If cost rationalization takes place, there will be some benefits on the input cost. And as far as the output is concerned, the alcohol sale is concerned, it is out of GST, has its state taxes. I think we will keep up the momentum. For the 26 outlook is that we will have 20% growth on our overall volume, and the P&A will grow much faster than that, and value growth more than 25% plus.
So we've achieved leadership positions in other categories, and it's now time for whiskies. Rampur has received accolades all over the world, and Royal Ranthambore recently launched is considered to be India's finest blended whiskey. There is a beautiful product on the drawing board, and it is a single malt whiskey, which we hope to launch by the end of FY26 as well.
All right, so that was the take coming in from Radhiko Khetan's management, sounding very optimistic on the demand ahead, as well as also gave us the volume guidance. But we also spoke with Rajiv Batra, head of Asia Equity Strategy at JP Morgan, as he says that AlcoBev is a premiumization play in India. Let's go across and listen in what else he had to say about the AlcoBev space.
Premiumization play in India, and as we have seen in the past, like the premiumization trend is upon increase beyond, like as I've said, where people take good care of their health and hospitals are beneficiary. And same side, you can say premiumization also benefit because of a rising GDP per capita. This is the part of the cycle we have seen in other EM also, who went through this from 2,500 GDP per capita to 3,000 and above, how the different plays came out. So AlcoBev was the one particular space. In other countries also we have seen got benefited when GDP per capita moved about certain level. And top of it, as you can say, more saving also coming in people's hand, either by the tax rate cut or even by normalizations of sales and the GST something, that will also help your AlcoBev space too.
Okay, so that's the word coming in from JP Morgan and their house view on AlcoBev. Let's also welcome on board Akshay Bhagwat of JM Financial Services joining us. Akshay, hi, good afternoon, and thanks for your time today. I want to get a quick chart check from you on ABFRL. One of the top gainers today on the Nifty 500 pack, a 6.7% uptick coming in. What are you making of this stock on the charts? And from this entire fashion retail play, is this your preferred bet?
Good afternoon to all. Well, ABFRL has certainly seen a very strong intraday move. And as I look at the charts, there is one confirmation of a strong double bottom formation at the base of around 72. The chart has been in a downtrend from the levels of 130, making an attempt of a recovery bounce. And this double bottom bullish pattern, which I speak of, would get confirmation once the stock manages to sustain above the levels of 81. So right now, it is at the point where it may swing either ways, but once it sustains above 81, we can look forward for targets till around 90 from a short-term trading perspective.
All right, so that's the take coming in on ABFRL. But with this, Naren would like to thank you for taking the time out and speaking with us this afternoon. Thank you so much for that. But time now to slip into a very short break. Don't go anywhere. Lots more lined up on the other side.
Welcome back to Closing Trades, and all eyes are of course on Fed Chair's Jackson Hole commentary as investors await the Federal Reserve's rate cut plans. That is going to be the next important trigger to watch out for, and that speech is going to be out for us later tonight, much later in the night, because this is going to be happening at US time. Chetan Haya, the chief Asia economist at Morgan Stanley, says that the Fed may not cut rates in September, and he also touches upon the health of the US labor market. Let's go across and listen.
If the chairman does indicate that the revision in jobs data point is a concern, it might sort of seal the expectation of a rate cut in September meeting. But it's possible that the chairman still indicates that unemployment rate is relatively low. And if you remember in the last press conference, chairman was very much focused on that number of unemployment rate. And that has not changed in the last sprint, despite the revision to the non-farm payroll. If the Fed cuts interest rates, at the same time, you have private sector balance sheets, which are in a good shape. So if private sector growth comes back, and remember that fiscal deficit is going to expand in 2026 because of the tax cuts that have been already announced. So a combination of strong demand from the government side, and at the same time, if the private demand picks up, that will be a concern for the bond market.
Well, of course, Jackson Hole Symposium as well as Jerome Powell's commentary will be the key to watch out for. And if we talk about the whole economic symposium, this year's theme is labor market in transition, demographies, macroeconomic policy in focus. Varun is here to tell us what's all the expectation is about. Varun.
Well, so the Jackson Hole Symposium has started and it would end on the 23rd of August. And this year the theme is labor market in transition, demographics, productivity and macroeconomic policy. Now all eyes would be on the speech of Jerome Powell, that is the Fed chairperson, and he would be speaking on the 22nd of August, that is Friday. This would be his 8th speech in Jackson Hole, because before this he has given 7 speeches, and by far this would be the last speech of Jerome Powell as Fed chairman in Jackson Hole, because next year in the month of May his term as the Fed chairman will actually end. And if you look at the economic data of US, the inflation data, the jobs data, the overall signals are very confusing. And also if you look at the FOMC minutes, there it has been said that the tariff effect may take longer to materialize, and also majority of Fed members view inflation as a bigger risk than employment. So all eyes would be on Fed chairman's speech, what he speaks on the overall rate cut for the September policy, because many are expecting a 25 basis rate cut, many are expecting that there would be no rate cut, because if you look at the money market, till last week they were expecting there were 90% chances that there would be a rate cut. Now the expectations have actually come down to around 73%. So this would be a precursor to the September policy, and all eyes would be on the speech of the Fed chairman Jerome Powell, and this would be his last speech, so the importance actually increases because of that as well.
Okay, Varun, thanks so much for taking us through that. Of course, that's going to be the next big trigger for the market to watch out for. Fed Chair Jerome Powell's last speech in his capacity as the Fed Chair is going to be later tonight for us. We have both our techies back with us as well. But let's also welcome on board Nitin Raheja, Executive Director at Julius Baer Wealth Advisors. And Nitin, hi, thanks so much for your time. Let's take that conversation ahead. My colleague Varun was highlighting what the street expectation is with respect to the rate cut that one could anticipate to see in September. Where are you placing your bets when it comes to a rate cut, and what do you have to say on the cascading impact it could have on our financials back home?
I think our global view is that we are expecting the first of the rate cuts to start taking place. However, given the data that seems to be coming out, it's very confusing and heading for mixed signals. But I think whichever way you look at it, the fact of the matter is Mr. Trump is going to outlast Mr. Powell. So we are going to see, if not September, we are going to see rate cut in the next meets. So I think clearly, directionally, we are going to see some of that happening before the end of the year. In which case, I think what we believe is that there is a case for a weaker dollar, which sort of portends well for EMs.
Well, yes, a weaker dollar could be good for the EMs, but Nitin, along with that, also help us understand back home, what are your sector likings at this point in time? Because, well, of course, we have discussed much in detail how this GST can give a boost to the economy and the different sectors as well. But along with that, post the earnings as well, we have seen a lot of sector churning that was already at play. What are your bets right now?
It's this is actually a very, very difficult phase in the markets, because we are seeing a progressive sort of earnings estimates getting downgraded for some time. And simultaneously, the markets for the last 1 year have done nothing. So, you're also seeing a P multiple derating starting to take place as markets don't go anywhere, and earnings at whatever slow pace are yet sort of growing, at 9 or 10% and so on and so forth. Our own view is that I think we believe with all the measures that have gone towards domestic consumption, and considering the state of the world that we find ourselves in with the tariffs and so on and so forth, I think very clearly the government realizes that for the economy to remain robust, to sort of counteract the so-called tariff penalties that have been imposed upon us. Consumption, which is almost 60% of our GDP, needs to come back and do very well. And hence, whether it was the tax change that happened in the budget or the measures in terms of more liquidity in the economy, lowering interest rates proactively, and now talking of a GST cut. I think clearly these measures with a lag will probably see a revival of domestic consumption. So we like consumption. We have a large part of our portfolio position for that play in consumption. We are playing it a little cautiously. We have premium consumption or premiumization of consumption as a theme, which is a part of the consumption which is more resilient as a part of our portfolios, as well as now we're looking at the broader consumption theme for the lower K of the consumption that has taken place. So we are seeing that happen. At the same time, we also believe a lot of NBFCs and banks are a proxy play for the revival of consumption. So I think we are using that as the other one. The third theme that we see, which is very, very resilient, is the power transmission capex theme. I think that's the third theme which is showing a great amount of resilience in the form of the kind of spending that is happening and the order books that are happening.
Okay, so those are some of the sectors that you're liking at the moment, Nitin. Let's get in some technical ideas from our experts who have joined us on the show, and time to get some BTST ideas as well, or rather some closing trades too. Akshay, you go first. Where are you placing your bets?
A couple of buying bets on positional front. The first one is in Indian hotels, where recently you have seen a very strong price breakout. And in the last couple of days, we have seen some cool off, which is giving you another opportunity to get back in the stock for possible targets of 851. Maintain a stop loss of 762 on this trade. Second trade is in Phoenix Mills, where a good bottom recovery has been seen in this stock in the last 4 trading sessions. The momentum is very strong, and possible targets till 1672 seem to be in the making. 1537 will be the stop loss on this trade.
All right, so those are the 2 buy calls coming in from Akshay. Let's watch out for that. But Gaurav, what about you?
So I have a couple of positional recommendations as well, and it's a blend of retest and breakout both, so as to have a balanced approach. As far as the retest is concerned, the first recommendation will be buy on carry ratings, which we had recommended our clients also at lower levels. It gave a very strong breakout at the levels of 1600, 1650, went higher towards 1850 and above. Has seen good correction in line with how the many of the other stocks have seen correction. It's made a retest and now seeing a pullback. So one can buy for 1750, keeping the stop loss at 1550. Second recommendation will be buy on Unominda, where I am trying to bankroll the momentum that we are seeing on a day when Nifty is down 200 points and there is some amount of spread on the mid caps as well. Unominda is one that has been consistently strong. If you look at the weekly charts, we have seen 2 strong weekly candles, and all likelihood will have a very strong closing today as well. Volume participation is very strong on both daily as well as the weekly charts, and a strong outperformance has been seen as well. A swing high breakout on the cards. One can keep a stop loss of 12.15 and buy Unominda for target price of 13.65.
Those are some of the stocks that are looking good to Gaurav at the moment as well. But a pack of stocks that are doing very well on the back of some order wins right now is the entire railway pack, because we've heard order wins yesterday evening post market, and we've also heard a few order win announcements coming in from some of these marquee railway names during the course of the market today as well. So they seem like they are back on the buzz on the back of certain triggers, and Kanishka is joining us to explain what these triggers could be. Kanishka.
Well, if you want to go home for the festive season, the competition is really getting tough, because it's really fastest fingers first when it comes to railways ticket bookings. In fact, the Indian Railways will also run 380 Ganpati special trains, while Mumbai's Western Railway is all set to get the indigenous covered safety system by the year end. That's why this particular sector, that is the railway sector, is in focus recently. Not just that, railway stocks, as I said, are on the fast track, lifted by festive season bookings, as I said, strong order wins, and also project announcements. Let's take a look at some of the key order wins. Now they look, Ircon International recently got an order worth 510 crore rupees. Texmaco Rail has got an order worth 103 crore rupees for wagons. Apart from that, there's Titagarh Rail, which is also won a 467 crore order. Apart from that, there's Jupiter Wagons, which is also won in letter of intent for Vande Bharat trains worth 215 crore rupees. And then there's Railtail, which is one project orders worth 50 crore rupees from Orissa and Kerala state governments. Now, with these orders, the current order book is looking very healthy. In fact, if we take a look at the railway order book, for just at the end of the Q1, Titagarh was at nearly 26,000 crores, Ircon at 20,973 crores. And that's why the railway sector is seeing strong traction. That's why railway stocks are buzzing in trade today.
All right, thank you so much, Kanishka, for highlighting all those details. But Nitin, the other fact of the matter is that of late, these railway counters are once again showing a bit of a momentum. But after so much of a correction and post-budget announcement, Nitin, since there was no big booster for the railway sectors in terms of the government outlay, all these stocks have corrected quite much. Do you believe they are offering an opportunity to enter any particular stock or segment that you wish to flag off?
We are not great fans of these kind of businesses which are dependent on lumpy government flows to come about, because we've seen that long-term sustainable wealth does not get created when you have one large client and who's you're too much dependent on for orders. So I think you will get clearly the direction is we are going to see more spending by the railways. The real question is that what are the valuations you're ready to pay for these kind of businesses and companies? To us, I think some of these are more short-term tactical bumps that you get every time you see an announcement of an order. So we would rather play it through a diversified engineering company which also has the railways as one part of the business, rather than some of these names, where the railway is the primary business, and there's one customer with 80-90% of the order book.
Okay, so that's a take coming in on railways and not looking very attractive to Nitin right now. But on that note, it's time to slip into a very short break. But as we do that, let's leave you with a very exclusive special interaction. The ban on real money online gaming may have an economic impact, but a negligible impact on employment. This is according to Tamil Nadu's IT Minister, Mr. Palanivel Thiagarajan. Speaking exclusively to ET Now, the minister also predicted more tough times for jobs in big IT, but told Jude Sanat, my colleague, that unlike Karnataka, Tamil Nadu wouldn't contest whether IT employee unions were legal or not. As we slip into a very short break, listen in.
I think in the tech industry, there are always inflection points, right? There are places when new approaches emerge, new scales emerge, and it changes the industry quite significantly. The kind of AI that we're talking about now, as I have just said upstairs, is in some sense automation of a lot of things that used to be done manually. And most of the innovators will be, by definition, small and medium. Right? Very, very rare that you find huge innovations happening in large organizations. We are all for online gaming. We are only banning real money games. So if it's entertainment, if it's creativity, all these things we are for, and we're supporting them in a big way. We've come up with an incentive policy for them. We're supporting the annual conference. I'm not so sure what the impact is on employment. I think that if you were to have a downturn in the sector, you would have certainly economic consequences. But generally, game development tends to be the lowest kind of manpower, highest productivity, highest creativity industry. We support the game development industry, online gaming, independent of real money.
Welcome back to Closing Trades right here on ET Now. In just a few minutes left before we shut shop and end this week rather. And Nifty 50 is now down over 200 points right now. While Nifty Bank as well, we have seen that selling getting intensified with over 600 points of cut as we speak. India VIX today is showing a bit of an uptick today. It's almost a 3% jump over there. While the breadth of the market is not looking that great, or rather in favor of all the bulls out there. But Nitin, what's your own sense on the new age tech companies? Because in the sell-off or the volatility of late, we have seen stocks like Zomato, Paytm, they are doing very well and they continue to do well. Even the earnings were supportive. But how do you justify the valuation and the kind of run-up that we have already seen? Do you believe any pocket still offers an opportunity?
I think if you look at some of the new age tech companies, what the market is rewarding them for is the fact that a lot of them have evolved their business model towards a path to profitability. And not only that, but with the existing business segment being where it is, they are now investing in new, using the, they've converted into platform plays. And these platform plays are now leveraging the platform for newer areas. And so they're basically opening up the entire TAM for the business. And in this kind of business segment, ultimately you will see the top two, having a 70-80% market share and the rest struggling to be there. So yes, I do agree that valuations have run up quite a bit and they are not necessarily cheap. But I think the markets are really rewarding the market leader by giving them a premium valuation. I think there are a lot of other areas. I think we will soon see, for example, if there is a move towards monetization of the UPI, you will see some of the payment companies starting to do well in this new tech area. You will see some of the retail-oriented companies starting to do well as we see domestic consumption pick up. So I think we will see pockets of opportunity over the next few years come out there.
Well, indeed, they are getting rewarded. And thanks, Nitin, for explaining the factors behind it. But Nitin, within the auto pack, we have one of those other companies, which is not purely a new age tech, but it's rather an EV company purely. And of late, we have seen that EV fight in terms of the market share, especially in the two-wheeler side, getting intensified. Who, as per you, could be the real winner, or the market is really going to be a little staggered in a way because the legacy players have now managed to gain some market share, but seems like some of the pure play EV companies are also gearing up to give a tough fight. What's your sense here?
I think if you really look at EVs today, there's a lot of promise that is yet being built into some of the valuations out there. And it's yet open ground in terms of the competitive intensity, and that's only getting increased by the day. I would yet like to bet on some of the legacy players because you have a strong, traditional business, which is the non-EV segment, which is giving cash flows, which is allowing them to invest into the whole EV segment. They have a dealer network at place. They have a brand in place. They have a reputational for reliability being there in place. So I would yet like to play that through some of the legacy players who have strong cash flows and who have the potential and who are also putting the might behind the EV segment.
All right, so stay with the legacy players versus some of those pure play EV companies. That's a call coming in on the two-wheeler EV space. But Akshay, just a few minutes left and the markets are definitely having a bit of a pressure from this highest level. We are sub that 25,000 mark. But Monday, we're going to be reacting to the global commentary with respect to the Jackson Hole Symposium. Next week, it's not just the monthly expiry. We also have the 27th August deadline. How do you see the opening on Monday, and what sort of levels that you will be keenly watching out for?
See, as we close today, we are at an important support zone, but looking at the intensity of the fall and 25,000 once again not able to sustain despite the efforts seen in the last couple of days makes me believe that the chart gap which we saw on Monday's opening, there is a good chance that this gap might get filled. So roughly 24,600, 24,650 revisit and fill up of that gap is most probably what is happening, and that should be seen in the expiry week on Monday or Tuesday. That's the price setup saying that possibly 100, 150 points more to go on the downside.
All right, 100 and 150 points more to go on the downside. But what about Bank Nifty, Akshay? How do you see the closing with almost 600 points of cut?
Bank Nifty now would deal with one of the most important support zones of 55,000. This has been more of a litmus test because we did see a kind of a gap up on Monday, but somewhere Bank Nifty has been a laggard in the entire week gone by. And if 55,000 breaks, then it can be some momentum-based selling in Bank Nifty, where one should be ready for downside still around 53,800 or possibly around 54,000.
So let's watch out for those levels indeed. But with this, Nitin, Akshay and Gaurav earlier, thank you so much for taking the time out and speaking with us this afternoon. Pleasure talking to you guys. But yes, just a few minutes left before we shut shop, and let me take it over to Snehi then, who is standing by to help us understand what were the key, which were the key movers rather in today's trading session. Snehi.
Well, yeah, Srishti, thanks for that. Let's take a look at how we are wrapping up for the market today. Although on the week-to-date basis, the Nifty might be closing on the positive basis for the second consecutive week. Intraday, it's been a day of mayhem on the markets because 0.8% of a cut is what we've seen today. A 220-point drop coming in on the spot basis. So you have Nifty that's closing around 24,866. Remember, at one point we started above that 25,000 mark, and we have declined one way downwards from there, and towards the day's low is where we are expected to close for the Nifty. Similar moves coming in for the Sensex today. Big cuts coming in. 0.8% drop coming in on the Sensex. Almost a 700-point cut coming on an intraday basis. The broader end of the market for most of the part of the trading day, we managed to hold on in the green, but all of that has also fizzled away, because if you take a look at the Nifty mid cap, small cap, both of those indices have closed in the red. You have India Wix that spiked up a solid 3% today, so some momentum in the India Wix after quite a lot of days as well today. And lastly, let's also take a look at Nifty bank on the benchmarks to understand what the banking index has done in today's trade, because as we see steep cuts coming in on Nifty bank as well, more than 1% lower and about 650 points lower on an intraday basis. That's the Nifty bank. Now let's take a look at some winning and losing stocks from the Nifty 50 pack. You have M&M, Maruti Suzuki, Bharti Airtel, BEL, Dr. Reddy's, the only stocks that have been in the green on the Nifty. On the flip side, deep pressure coming in from Asian Paints, Grasim, Ultratech, Adani Enterprises and Hero Motors, all trading with cuts of about 2% today. Sectorally, it's been the day of Nifty pharma stocks, while select media stocks have done well, but it's through and through Nifty pharma today with names like Ipca Labs, Divi's Lab, Torrent Pharma, Aurobindo, Alchem. All of them have done well, so a good day coming in for some of the pharma stocks. On the flip side, the top sectoral loser is Nifty Metal, more than 1% cut seen on Nifty Metal today, with names like Tata Steel, NMDC, JSW Steel, Nalco, Hindustan Zinc. All of these stocks have closed deeply in the red, so the metal counters were in pressure. As was the case with some of the PSU banks, the second most losing sector coming in today. So PSB, PNB, Central Bank, Union Bank, Bank of Baroda, SBI, all of these stocks have closed in the red. So the entire PSU banking sector has also closed with deep cuts. On the flip side, what's done well today from the broader end is ABFRL up about 7.5%, Z Entertainment, PTC Industries, Uno Minda, all these stocks have done well, but pressure continues to sustain on names like Godfrey Phillips. You have JK Cement, India Cements, LT Food, Hyundai, Ola Electric. All of these stocks continue to reel under pressure. Lastly, even though the market has been absolutely lackluster today, some stocks have inched their new high, live high rather, and that's Uno Minda, Lemon Tree, JM Financial, Paytm sitting pretty at a 52-week high. So all of this has worked well with the market today. Dixon and ITC on the back of mixed brokerage notes in focus as well today. So that is how we are shutting shop for the day. We'll give those rates some time to settle. 24,870 thereabouts is where we are settling at today. But back to the market action. Let's hand it over to the studio for your trades.